which is preparation, enactment, and execution of the budget. So in India, the word budget is referred to as the annual financial statement under the Article 112 of the Constitution. So the annual financial statement, it simply means the estimated receipts and the expenditure of the government for the coming financial year. So every year the government plans in advance how much money it expects to receive and how much it plans to spend. So if you look at the historical background, the first budget in British India was introduced by 1860 by Sir James Wilson. India basically followed the British system of financial administration, which was originally developed in England. One of the most important features of the system is centralized financial control. It means that the financial powers are mainly concentrated in the finance department. And the finance department plays a very important role because it is responsible for maintaining financial stability and protecting the economic interests of the country. Okay, this is the PPT for Unit 4. I'll just continue. So the stages of the budgeting process. Now let's understand different stages which are involved in the budgeting process. In India, the budget passes through 5 important stages. The first stage is preparation of budget. Second stage is approval or enactment by the parliament. So the first budget will be prepared and then it has to be approved and enacted by the parliament, which is the second stage. And third stage is the actual execution of the budget. And fourth stage is accounting. Fifth is auditing. So each of the stages, they play a very important role in ensuring proper financial management in the country. So now let's look into these steps one by one. The first stage is the preparation of budget. Preparation is the most crucial step in the entire budgeting process because it forms the base of all future financial activities. The preparation of the budget begins well in advance. Usually, it begins 6 to 8 months before the start of the financial year. And the overall responsibility for preparing the budget lies with the Ministry of Finance. However, the Ministry of Finance does not, do all the work alone. There are 3 important bodies that assist the preparation process. First, they are firstly we have the administrative ministries, and then we have Niti Aayog, and thirdly the CAG, Comptroller and Auditor General of India. These 3 bodies, they assist the Finance Ministry in the process of preparation of the budget. So the administrative ministry, it has detailed knowledge about all their departments. So that is the first body which assists Finance Ministry, which is the administrative ministry, which has detailed knowledge about all their departments. So they provide accurate information about their financial needs and requirements. And the second body which I told was Niti Aayog. It plays an important role in planning and deciding national priorities. It ensures that the budget reflects development goals and policy priorities. The CAG provides technical expertise and accounting. This means in preparing accurate, estimates and income and expenditure, here where the CAG provides technical expertise in accounting. So, and then the preparation of estimates. So the process basically begins with the budget division of Department of Economic Affairs in the Ministry of Finance. So basically first we have Ministry of Finance, Under Ministry of Finance, there's a department called Economic Affairs. And under this department, there's a small division called Budget Division. That is where the actual process begins, at the Budget Division. First, we have Ministry of Finance at the top. Under Ministry of Finance, we have Department of Economic Affairs. Under Department of Economic Affairs, we have Budget Division. So the Budget Division is where all the process actually starts. So this division, what it does is, it basically sends a circular to all the ministries and departments. And this circular asks them to prepare estimates of expenditure for the next financial year. So this budget division is basically preparing a circular and it is sending it to all the ministries and departments and asking them what are your expenditures, estimated expenditures for the next financial year. So a basic principle which is followed here is the authority that spends the money should also prepare the estimates. So the standard forms are called skeletal forms are provided to fill in the required details. And these forms are then passed to the disbursing officers. These disbursing officers are responsible for preparing the estimates based on the actual data and requirements. So each form includes several important details such as the heads and the subheads of the expenditure, actual expenditure of the previous year, what are the sanctioned estimates of the current year, what are the revised estimates of the current year. So all these are included in those forms. And these forms are later forwarded to the disbursing officers. So after this, after the preparation of estimates, there will be a scrutiny and consolidation of the estimates. Means once the estimates are prepared, they are sent to the heads of the departments for the review. So whatever departments they are getting these forms from the budget division. Budget division is basically sending the circulars to different various departments. So these department people, they will prepare the estimates and then they will send it to the heads of the departments for the review. The estimates are divided into two main parts. So one part includes the revenue and other part includes the expenses. Sorry, one part consists of revenues and expenses. And the second part consists of continuing items and another for new items. So the heads of the departments, they carefully examine these estimates. After reviewing, they consolidate all estimates of the department. These consolidated estimates are then forwarded to the Ministry of Finance by the middle of the November and so. So at the same time, a copy is also sent to the Accountant General. And the Accountant General, he checks whether all the expenditures are properly included. He ensures that both sanctioned and unsanctioned items are clearly shown. And then he submits his observations and comments to the Finance Ministry. So once the departments are filling these circulars, they are then sent to the heads of the departments. From the heads of the department, it is then going for the review to the Accountant General. And from there, it is then going to the Finance Ministry. Okay, and the third stage is the scrutiny by the Finance Ministry. After all this, the Finance Ministry will be taking the next step. All estimates from different ministries are examined by the Budget Division. The nature of the scrutiny is different from that of the administrative departments. So the Finance Ministry mainly focuses on financial discipline and economy. It does not question the policy decisions of the ministries. Its main aim is to balance all expenditure demands within the available financial resources. And if there is any disagreement between the ministry and the Finance Ministry, the issue will be referred to the cabinet. In such matters, the opinion of Finance Ministry is usually given more importance. So after this, there will be the preparation of revenue estimates. After finalizing expenditure estimates, the next step is preparing for revenue estimates. This is also again done by the Finance Ministry. Different departments like, A Central Board of Direct Taxes and Central Board of Indirect Taxes play a key role. They estimate the expected revenue based on previous year's data. So, based on these estimates, the government may decide to increase or decrease the tax rates. After both expenditure and revenue estimates are ready, so important documents are then prepared. These includes the demands for grants and the annual financial statement. The demands for grants show how much money each department requires. So the demand of grants is nothing but how much money a department needs. Okay, that those are called demands for grants. And the annual financial statement gives a complete picture of the government's finances. So after all this, the final stage is the cabinet approval. Finally, the complete budget, it will be placed before the cabinet. And the cabinet carefully examines the budget. Once it is approved, the budget is ready to be presented in the parliament. It is important to note that the budget is kept strictly confidential before the presentation. The secrecy is maintained to avoid, any kind of misuse or speculations. Only after the official presentation does the budget become public. So this is how the budget is prepared. These are some steps which are followed during the preparation of budget. First is the preparation of estimates. And then these budget estimates, scrutiny and consolidation are done by the departments. After that, there will be scrutiny and preparation of estimates by the finance ministry. And then the fourth stage is preparation of estimates of revenue by finance ministry. And finally, there's approval by cabinet. Now let's look into the enactment of budget. So in India, no tax can be imposed and no money can be spent without the approval of the parliament. This is one of the very important principles of democracy. So the journey of budget through the parliament becomes a very crucial part of the process. Now let's see the different stages through which budget is being passed in the parliament. So there are 5 main stages. First is the presentation of the budget. Second is general discussion. Third is voting on demand for grants. Fourth, passing on appropriation bill. And fifth, passing of the finance bill or taxation proposals. So the first stage in enactment is the presentation of the budget. Earlier, the budget in India was presented in two parts, which is the railway budget and the general budget. This railway budget was separated in 1921. However, since 2017, both have been merged into a single general budget. So there are some important rules. No demand for grant can be made without the recommendation of the president. And no proposal for expenditure can be made without the president's approval. So along with budget, there are several other important documents which are also presented. These include budget at glance, receipts budget, expenditure budget, and a memorandum explaining the financial bill. After presentation, there is no immediate discussion. Copies of budgets are distributed to all the members. And next we have the general discussion. The second stage is general discussion. So the discussion won't generally take place on the same day when the budget is presented in the parliament. After it is presented, the speaker fixes a date, usually about like 1 week later. So around 4 days, after that around 4 days will be given for the discussion. During this stage, the entire budget is discussed in a general way. So the members discuss overall policies and priorities of the government. Even expenditures that are not voted upon can be discussed. This discussion is more political than technical. The opposition plays an important role here. They review the performance of the government and raise public issues. So the opposition, they basically They review the performance of the government and raise public issues. And there won't be any voting that takes place during the general discussion period. So at the end, the finance minister gives a reply to the discussion. So after the budget is presented in the parliament, there will be a general discussion. And after the general discussion, a few days, like around 4 days, there will be voting on demands for grants. So basically, before voting, the demands are examined by the department related standing committees. So there will be several standing committees which will be appointed in order to review or examine all the demands for grants. So these committees were introduced in 1993, and we have like 24 such committees, standing committees, and some are headed by members of Lok Sabha, and some of the standing committees are headed by members of the Rajya Sabha. So each committee studies the demands in detail. After this, after this careful examination of these demands, Lok Sabha will take up voting. Only Lok Sabha has the power to vote on demand for grants. The Rajya Sabha does not participate in voting. So usually 26 days are allotted for this process. Due to limited time, many demands are voted without detailed discussion. So the main demands will be discussed, and some can be voted without even discussion, because there is no enough time. They only have hardly 26 days in which not all the demands can be discussed in detail. So the speaker fixes time limits for each demand. Speaker places a time limit for each demand, and once the time is over, the demand is put to vote. And members can suggest cuts in expenditure. Sometimes they propose a token cut of small amount to criticize a department. This allows members to discuss issues related to administration. So at the end, each demand is voted. If approved, it becomes a grant. It is important to note that Parliament can only reduce or reject a demand. It cannot increase the amount. So basically, it will only reduce or reject, but the amount will never be increased. It cannot increase the amount. If more funds are needed later, supplementary grants are used. Okay. So in the enactment budget, the fourth stage is passing of the appropriation bill. After all the grants are approved, they are combined into a single bill. And this single bill is called as appropriation bill. This bill authorizes the government to withdraw money from the Consolidated Fund of India. It includes both voted expenditure and charged expenditure. The bill is introduced in the Lok Sabha, and the discussion here is limited to new points only. No changes can be made to the amounts which are already approved. So after passing in the Lok Sabha, it is then sent to the Rajya Sabha. The Rajya Sabha cannot reject or amend this bill. It can only give suggestions within 14 days. And the Lok Sabha may accept or reject those suggestions. If the Rajya Sabha does not act within 14 days, the bill is automatically considered as passed. And then the finally bill will be sent to the president for his approval. The president cannot return a money bill, so approval is mostly a formality. And the final stage is passing of financial bill. The Appropriation Act allows spending, but it does not explain how money will be collected. So the appropriation bill basically consists of all the expenditures which the government is going to incur in that particular financial year. Whereas the finance bill, it talks about how the money will be collected. So for this, to explain how the money will be collected, the finance bill is introduced. This bill contains all taxation proposals of the government, and it is presented along with the budget. The procedure for financial bill is similar to that of a money bill, and amendments are allowed only to reduce or abolish taxes. Once the budget is presented, tax proposals can take immediate effect under the law. So the finance bill must be passed before the end of April, and after it is passed, the government gets authority to collect taxes. With the passing of both the appropriation bill and the financial bill, the enactment of budget is complete. This means the government has legal authority to both spend money and collect revenue. Introduction to grants. Now let's move to another concept which is about the grants. The budget normally includes regular annual estimates of income and expenditure. However, sometimes unexpected situations arise. In such cases, additional financial provisions are required. And to meet these situations, the Lok Sabha can approve different types of grants. There are mainly four types of grants. First is supplementary grants. Second, vote on account. Third, exceptional grants. And finally, vote on credit. Let's first understand supplementary grants. Sometimes the money approved in the budget is not sufficient, or a new service may arise which was not included earlier. So, in some cases, actual expenditure may exceed the estimated amount. In such cases, additional funds are required. So, under Article 115 of the Constitution, the President can present a supplementary financial statement before Parliament. This statement includes the details of additional funds needed. These grants are then passed in Parliament following the same procedure as the appropriation bill. And the next is vote on account. Under Article 116, the Lok Sabha has the power to grant money in advance. This is done when the budget has not yet been fully passed. So a temporary provision is made. This is called a vote on account. It usually covers expenditure for a short period. Generally, it is for about 1/12 of the total annual expenditure. And it is important to note that this is used only for existing services and not for the new ones. And the third type of grants is exceptional grants. And the fourth is vote on credit. I'll explain both together. So sometimes there may be unexpected and urgent situations. In such cases, the government may need funds immediately. So under Article 116, the Lok Sabha can approve a grant even when full details are not available. This is called vote on credit. It is used for large and uncertain expenditures. And exceptional grants are a bit different. They are given for special purposes that are not part of regular budget. In both the cases, the money can initially be taken from Contingency Fund of India and later it must be approved by the Parliament. So that is all about enactment of budget. Now let's look into execution of budget. After the budget is approved, it must be properly implemented. And this responsibility lies with the executive. The executive uses the funds as approved by the legislature, and there are two important principles in budget execution. First, all spending must follow the Appropriation Act and Finance Act. Second, the execution must be done with honesty, efficiency, and integrity. So, the steps in execution. The execution of budget involves five main operations: assessment and collection of revenue, custody of public funds, disbursement of funds, accounting, and auditing. Assessment and collection. So, before collecting taxes, the government must first assess them. Assessment means deciding how much tax each person or organization has to pay. This includes preparing a list of taxpayers and calculating their tax liability. The government must create a proper system to ensure correct assessment. It must also prevent tax evasion. After assessment, the collection process begins. The method of collection depends on the type of tax. For example, customs duties are collected immediately. Sometimes bills are sent to taxpayers. In some cases, tax is deducted at the source, like income tax from salaries. In other cases, officials may directly collect taxes, and all collected money is then deposited in the government treasury. The Department of Revenue supervises this process. It works through bodies like Central Board of Direct Taxes and Central Board of Indirect Taxes. And the second stage is the custody of public funds. All collected money must be kept safely. There are two important concerns. First, there should be no misuse or fraud, and second, payment should be convenient and efficient. Earlier, money used to be stored physically after collection in treasuries, but now with the development of banking, most of the transactions are done through banks. Payments are usually made through checks or digital methods. In India, the Reserve Bank of India plays a major role in managing government funds. Where RBI facilities are not available, the State Bank of India performs these functions. However, due to the large size of the country, many treasuries still exist. And the third stage is disbursement of funds. Disbursement means withdraw of money from government expenditure. This must be done carefully to avoid misuse. The legislature gives funds to the government as a whole. The Ministry of Finance controls the spending, and each department head is made a controlling officer. These officers distribute funds to disbursing officers. Funds are divided into different categories like salaries, office expenses, and contingencies. So, the basic unit of control is called subhead. Only authorized officers can withdraw money from the treasury. And the fourth stage is accounting. Accounting means maintaining proper records of all financial transactions. This is very important for transparency and control. Through accounting, we can check whether money is spent legally, whether it is spent properly, and whether it is within budget limits. It also helps in policy making and future planning. And finally, we have auditing. Audit means checking whether the money has been spent properly. It ensures accountability of the government. In India, auditing is done by the Comptroller and Auditor General of India. And the CAG checks whether money is spent according to rules, funds are not misused, and expenditure is economical and efficient. The CAG acts as an agent of Parliament. The Parliament exercises control through committees like Public Accounts Committee, Estimates Committee, and the Committee on Public Undertakings. So the grants help manage unexpected financial needs, and the execution ensures that approved budget is properly implemented. So both the grants and execution financial are essential for effective financial administration. Now let's look into Unit 4, Finance Ministry. The Finance Ministry is one of the most important ministries in the Government of India. It plays a central role in managing country's finances. It controls and supervises the financial activities of all other departments. The Finance Ministry prepares the national budget and presents it to the Parliament. After the budget is approved, it ensures proper implementation. It also monitors how money is spent by different ministries. Finance is often called the fuel of administration. Without money, no government activity can function. So the Finance Ministry keeps the entire administrative system running. The Finance Ministry is also a very important The Finance Minister is also a very important member of the Union Cabinet. So the history of the Finance Ministry. The origin of Finance Ministry goes back to the year 1810. At that time, a separate finance department was created. Initially, it was a part of different departments at different times, but from 1810 to 1816, it was under the public department. From 1816 to 1830, it came under the territorial department and later under the general department. And a separate secretary for finance was appointed in 1843. In 1879, it was renamed to Department of Finance and Commerce. Later in 1905, it was again renamed as Department of Finance. And after independence in 1947, it became the Ministry of Finance. Initially, it had main three wings: expenditure, economic affairs, and revenue. In 1949, it was reorganized into four departments. But at present, the Finance Ministry has five departments. So at present, the Finance Ministry has five departments. First is Department of Revenue, second Department of Expenditure, third Department of Economic Affairs, and Department of Investment and Public Asset Management. We have Department of Economic Affairs, Department of Financial Services, and finally Department of Investment and Public Asset Management, which I've written here as the DIPAM. Okay, so now let's look into these ministries one by one. The Department of Revenue deals with all matters related to taxes and revenue collection. It handles both direct taxes and indirect taxes. It also deals with customs, excise duties, and income tax. This department advises the government on tax policies. It also works on improving tax laws. Important divisions under this department include Administrative Division, which handles administrative work, Sales Tax Division, which deals with tax laws, Narcotics Control Division, which coordinates with international organizations, the Central Board of Direct Taxes, which handles direct taxes, the Central Board of Indirect Taxes and Customs, which handles indirect taxes. So overall, this department plays a key role in generating government revenue. Then we have Department of Expenditure. This department controls government spending. It sets financial rules and regulations. It also approves expenditure proposals of various ministries. It advises departments on financial matters. It includes several important divisions such as the Establishment Division. It includes divisions such as Establishment Division, Civil Expenditure Divisions, the Defense Division, the Staff Inspection Unit, the Cost Accounts Wing, the Plan Finance Division. So this department ensures that the public money is spent carefully and efficiently. Next, we have Department of Economic Affairs. This is one of the most important departments again. It deals with economic policy and financial management. It monitors economic trends and advises the government. It also prepares the national budget. It manages foreign exchange and external financial assistance. It handles policies related to banking, currency, and investments. And this department has several divisions such as the Budget Division, External Finance Division, Internal Finance Division, and Economic Division. This department again plays a major role in economic planning and development. So now let's look into Department of Financial Services. This department deals with banks, insurance companies, and pension systems. So it supervises the functioning of financial institutions. It focuses on financial inclusion and social security. It manages important government schemes such as Pradhan Mantri Jan Dhan Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, Suraksha Bima Yojana, and Atal Pension Yojana. It also supports institutions like RBI, Reserve Bank of India, National Bank for Agriculture and Rural Development, and Small Industries Development Bank of India. It monitors public sector banks and insurance companies. It also works with regulatory bodies. And overall, this department ensures financial stability and inclusion. Now let's look into the Department of Investment and Public Asset Management. DIPAM stands for Department of Investment and Public Asset Management. So this department was earlier known as the Department of Disinvestment. It was set up in 1999 and its main role is to manage government investments in public sector companies. It handles disinvestment and privatization policies. It ensures proper use of public assets. It also manages the National Investment Fund, and this department helps improve efficiency in public sector enterprise. So the Finance Ministry plays a central role in governance. It manages revenue, controls expenditure, plans economic policies, and ensures financial stability. Without the Finance Ministry, the functioning of the government would not be possible. Now let's look into the functions of Ministry of Finance. So the Finance Ministry, it performs several important functions for smooth functioning of the government. So the first function is administration of finances. It manages the finances of the central government. It also deals with the major economic issues like inflation and recession. And the second function is revenue generation. The Finance Ministry raises money for government activities. It decides taxation policies and borrowing policies. And the third function is handling banking and currency matters. It deals with issues related to banks and the monetary system. And the fourth function is control of expenditure. It supervises how money is spent by different ministries. And it works in coordination with administrative departments. All these functions show that Finance Ministry is a very popular organ of the government. Therefore, the Finance Ministry is usually a senior and experienced leader. Therefore, the Finance Minister is usually a senior and experienced leader. So, the role of Finance Ministry. So, the key role is that first it raises resources for entire government. It collects revenue not for itself but for all departments. Second, it examines the demands for different departments. It ensures that spending is necessary and justified. And at the same time, it protects the interests of the taxpayers. In this role, the Finance Ministry acts like an independent authority. It works without pressure from other departments. It ensures financial discipline in government functioning. It is often considered as an extended arm of Parliament. This is because it ensures that public money is used properly. It also monitors whether government expenditure is within limits. In simple words, it acts as a guardian of public funds. Now let us understand how Finance Ministry exercises control. This control can be divided into three stages: during budget preparation, during budget execution, and control over miscellaneous matters. Now, first, let's look into control during budget preparation. During budget preparation, the Finance Ministry examines all proposals from different departments. It studies the financial impact of each proposal. It does not go into technical details but focuses on financial feasibility. It also helps in policy formulation by reviewing proposals. After receiving all proposals, it decides priorities. It suggests way to reduce unnecessary expenditure. Its aim is to balance spending across different sectors. It tries to ensure maximum benefits from limited resources. The next is control during execution, budget execution. After the budget is passed, control continues during execution. Administrative departments are responsible for spending, but they are guided by the finance ministry. Each department is supported by an internal financial advisor. The finance ministry ensures that money is spent properly and economically. Before spending large amounts, department must take prior approval. This is called expenditure sanction, sorry. Similarly, transferring funds from one head to another requires approval, and this is called reappropriation. The finance ministry also conducts quarterly reviews. This helps in monitoring spending and performance. It also helps in preparing future budgets. Control on miscellaneous matters. So it basically includes grants and aids, losses, waiving recoveries, contracts, and staff inspections. In all areas where the large public money is involved, the finance ministry plays a role. It ensures financial discipline and accountability. Now let's look into some of the criticisms of finance ministry. One major criticism is that its control is too detailed. It sometimes interferes even in small matters. And another criticism is that it follows a rigid financial approach. Because of the frequent budget cuts, departments may increase the estimates unnecessarily, which leads to inaccurate budgeting. It is also said that the finance ministry examines technical matters, which is not its expertise. This causes delays in decision making. And some experts argue that this process becomes time consuming and inefficient. However, control is still necessary to prevent misuse of public funds. As experts have said, financial discipline and administrative enthusiasm must go together. Too much control can slow down progress, but no control can lead to wasteful expenditure. So, a balance is always required. So, the finance ministry plays a crucial role in governance. It manages revenue, controls expenditure, and ensures financial discipline. At the same time, it faces criticism for being too strict. Therefore, an effective balance between control